Is this the end for Solana? Will Solana be added to the big and growing graveyard of blockchains that never achieved more than their 15 minutes of fame? Is Solana simply too much of a raging dumpster fire to be saved? Maybe. You see, while Solana has spent the year struggling with frequent outages and really just the general bear market mayhem, the collapse of FTX could be the proverbial nail in the coffin for FTX. Alameda Research and FTX, they invested over $1 billion into the Solana network over the past few years, perhaps even using the Solana network as a tool to wash their dirty laundry. Now, the codependent relationship between Sam Bankman-Fried and Solana's creator Anatoly Yakovenko is calling into question the future of Solana. The relationship between Anatoly and Bankman-Fried is very extensive. It is a relationship that started when Bankman supported an early 2021 funding round of $314 million within the Solana Foundation. Solana soon became the second largest holdings of Alameda and of FTX. In fact, Bankman was set to invest another $100 million of customer money into the Solana Web3 Gaming Developers Fund just a week before the whole bomb dropped with FTX collapsing. Solana addressed the FTX bankruptcy announcement publicly to review the facts about its current status. So concerns about the future of Solana were of course reinforced in their statement. It turns out that the Solana Foundation had $1 million in cash or cash equivalents on FTX.com as of November 6th, 2022, when FTX.com ceased processing withdrawals. Now, according to Solana, this is less than 1% of the Solana's Foundation cash or cash equivalents, and the impact on the Solana Foundation operations is considered to be negligible. So don't worry, everything's fine, as they say. By the way, there's also 3.2 million shares of FTX common stock, 3.4 million FTT tokens, and 134 million Serum tokens on FTX that Solana will not be able to access either. It turns out that the Solana Foundation sold a total of 58 million of their pre-mined unbacked SOL tokens to Alameda between 2020 and 2021 for an undisclosed amount of money. This inherently made Alameda the largest backer of the Solana ecosystem. But perhaps one of the most interesting things announced was actually the amount of staked Solana tokens that were set to be unlocked shortly after the whole FTX collapse on November 10th. Almost to say that, the shit was about to hit the fan in a serious way, setting the stage for 250 wallets of $29 million worth of Solana to begin their exit. You can probably guess what happened in the lead up to November 10th to the price of Solana. Yeah, Solana fell by over 70% in just 4 days. Decentralized exchange volume on Solana also spiked to its highest value in months from November 8th until November 11th, with around $1 billion in trades, as basically everyone and their mothers were rushing towards the damn exits. Since this bank run on Solana began, Solana has basically been in a downward spiral, losing an astronomical amount of money over the last few weeks with people fleeing the chain. Total value locked on chain for Solana has fallen to an all-time low with less than $300 million worth of liquidity remaining on the network at the time of recording this video. This run on the Solana Bank has essentially sent the entire Solana ecosystem scattering. To put it into just perspective here for you, Solana had a total of $6.7 billion in total value locked on its network in January 1st of this year. This has, of course, caused a cascading effect that's led to Solana to have a network valued at less than DeFi chain, which is something that was created from the ashes of the long dead project 10x. Relatively newcomer Arbitrum has 3 times the value locked on chain as Solana does. This is why you almost have to chuckle whenever the phrase Ethereum killer pops up, as it so often does, because right now Solana has 83x less value on chain than Ethereum. The chance of recovery to even skim the surface of Ethereum's total value locked looking increasingly uncertain at this point. Solana is currently facing a mass exodus of developers as well, leaving the network in the fallout from FTX. That's potentially a major warning sign, even more so than the total value lock, that Solana is in big trouble. Even if it survives the current liquidity crunch and it rises slowly from the ashes, and it is in a state of ashes right now, then there won't be anyone left to build anything if that happens. Commitments to development have dropped by half in just 1 week. Meanwhile, active developers working on Solana have also been cut in half in the last month, which begs the question if some of those working on Solana even knew that something was potentially wrong here, that something was about to happen. As the data shows, the exit for developers began before the news was made public about FTX. Maybe it was the 7,000 Solana wallets that were drained back in August that started to shake confidence. Maybe it was the Solana exchange Optify wiping out $660,000 in USDC that same month due to a coding error. Maybe it was just that Solana hasn't been able to go more than like a month or two without some kind of catastrophic on-chain meltdown or outage. Maybe it's just too centralized. The Solana platform, for example, Solend was able to forcefully liquidate a whale's account. Not awesome by any means. Decentralized my butt. Anyway, these new quote-unquote Solana killers coming out like Aptos, they're putting more pressure on. They're not even going to need to do very much to kill Solana potentially at this point. Just wait for Solana to kill itself. We are seeing a big exodus of stablecoins as well. Tether announced this week that they're removing $1 billion USDT from the Solana network, notifying the community via Twitter just moments before making the transfer. Now, this is possibly the worst thing that could really happen to Solana. You see, Tether leaving shows a very, very clear sign that Solana is in big trouble. The Solana stablecoin market cap has continued falling as hundreds of millions of dollars in stablecoin liquidity continues to leave the network looking for greener and safer pastures. News is also coming out that some exchanges are no longer accepting Tether withdrawals and deposits on the Solana network. Also not awesome. It's not just that Tether is running away from Solana either. USDC is also joining in to rush for the exits. We also have the loss of right across the board stablecoin liquidity. We also have the previously announced Euro stablecoin deal, which Solana made with Circle for 2023, now really being called into question as well. Solana NFTs have been hit very hard in the Solana dumpster fire inferno that's going on, with Solana floor indicating that aggregate floor value for NFTs dropped 68% from 424 million to 135 million over just a few days. The real volume for SOL token trading has dropped to below $100 million. One of the largest infrastructure protocols on Solana, it's Serum DEX. It plays a very key infrastructure role and really works as the back end for most other major decentralized exchanges on Solana. Well, trading on Serum has basically plummeted to less than $10 million in daily on-chain volume. When it comes to overall value locked on all of the DeFi networks on Solana, well, Solana has fallen so far that it has made it all the way into the other category, right along with all the other failed DeFi protocols. The top 20 projects on Solana continue to lose a significant amount of value. Collateral-backed loan platform Solend, for example, potentially getting the worst of it, with almost 90% of its value erased in just the last 30 days. So crazy stuff. Now, before telling you about whether or not Solana has a future, I just want to let you know about my weekly cryptocurrency investor newsletter. It's called Wealth Mastery. It's absolutely jam-packed full of alpha on altcoins and airdrops and testnets and NFTs and DeFi tutorials and market analysis and much, much more. Join our 50,000 weekly readers by signing up for free using the link down below in the description. So, Solana's future. We know that it's bad right now. We've laid that case out very, very clearly. But what next? Can Solana recover? At this point, it's really hard to see the upside for anyone to purchase Solana tokens without new investors really coming in to pick up the torch of the old ones. Solana could be doomed to fail and join the ranks of the other once were hot networks like Icon or NEM or 20 other names. The team has a lot of work to do in order to avoid such a fate. Founder Anatoly took to Twitter recently to urge validators, for example, to update their nodes to the latest version, something that really would help to begin to solve many of the bugs that have crashed the Solana network throughout the year. However, the response from validators has been somewhat non-compliant, shall we say, with only 44% of validators upgrading to the latest version, which is pretty crazy, and further erodes the trust in Solana as it's unable to maintain even its own very centralized network of validators. When questioned by the community about Solana's less than 3,000 transactions per second on chain, right? You know, it's they're saying that it can do up to 50,000 transactions per second, but they're only really getting 3,000. Well, Anatoly responded by blaming Solana's block capacity. This is where separating crypto from Bitcoin becomes, of course, even clearer. Sure, there's a chance we might see lower Bitcoin prices before the end of the FTX fallout contagion is fully known, but Bitcoin has proven itself over time. We know Bitcoin's not going to go anywhere, but Solana's future, that's much more in question, and it will be continued to called into question over the coming months as money flees to other places. And well, no one can possibly know what will happen next for certain. The truth is that Solana right now is skating on thin ice. Any further catastrophic events, like another major network outage, which could happen at any time on Solana, another major DeFi exploit could happen at any time on Solana, a big hack, right? That might just be the final straw that breaks the camel's back. Plus, we all know that capital in crypto is very much mercenary capital. When we see new networks like Aptos and Sui, both Solana killers, starting to take off, there was nothing to stop the money and the developers from moving over there if those networks offer a superior product. Not to mention that Ethereum layer 2s are cheap, reliable to use, things like Arbitrum are great, putting even more pressure on something like Solana. Okay, that's it. Subscribe now. See you next time.